Hi everyone, welcome back to my channel, Your Everyday Economics. I'm Parul. Today we will be looking at bonds. Bonds are debt securities issued by corporations, governments, and other organizations to raise capital. When an investor buys a bond, they are essentially lending money to the issuer for a specified period in exchange for regular interest payments and the return of the principal investment at maturity. Here are some of the key terms you should know when it comes to bond prices and payments. The first is the face value. This is the principal amount that the bond will pay back to the investor at maturity. Next is coupon rate. This is the fixed rate of interest that the bond pays to the investor each year. It's calculated as a percentage of the face value. Third is coupon payment. This is the amount of interest that the bond pays to the investor each year, calculated as the coupon rate multiplied by the face value. Next is yield to maturity. This is the total return that an investor can expect to earn if they hold the bond until maturity. It takes into account the bond's current market price, the coupon rate, and the time to maturity. Next, we need to understand the bond's market price. This is the current price at which the bond is trading in the market. It can be higher or lower than the face value, depending on the various factors such as interest rates, credit ratings, and market conditions. Another important term is bond's maturity date. This is the date at which the bond's principal amount is due to be paid back to the investor. Two more important concepts that are important to know is call option. Some bonds may include a call option which allows the issuer to redeem the bond before its maturity. This can affect bond's current market price and yield to maturity. Last is credit rating. This is a rating assigned by credit agencies to indicate the credit worthiness of the bond issuer. High ratings indicate lower credit risk, which can affect the bond's market price and yield to maturity. Understanding these key terms can help us investors make informed decisions when buying and selling bonds, as well as calculating the potential returns and risks associated with our investments. Hope you found today's information useful, and please subscribe to my channel if you haven't done already. It means a lot every time you like my video. So I'll see you soon in my next video. Take care. Bye.